Today I'll be answering the self-insurance question that was asked by Joe Average. First, I want to say thank you to Joe Average. He pretty much has been here since the start of the channel. He's commented on almost every video. So let's get in there and answer this in full detail. His question is, am I right because I've heard and read that if the driver has 100,000 in his bank or has equity of 100,000 or more, being that it is the minimum to be insured, that they can opt out of carrying insurance because they can afford to pay for the wreck, and or if the person is bonded for over $100,000, carrying insurance is an option for them. I'm really curious though, how many times you've ran into people in that situation. Do they have to carry a certain paper or just flip open the checkbook and show you've got 100,000 plus, so you don't need to carry insurance? I have run into one person that was self-insured, which it was a company. And it was part of AT&T. They were the only ones I've ever seen self-insured, but it was also through a different insurance company that stated that it was self-insured, but it had a different insurance company's name on it. So they still technically went through an insurance company, but they were able to do it as more of like a bond like you're talking about. This is going to be a really tricky and hard question to answer because the $100,000 is not the minimum. The minimum, if you added everything together, would be 75,000. And I'm going to switch over to my whiteboard. I hope that everybody can see it, but that's where we're going to go next. I'm sure this is where the confusion comes in as far as where everybody keeps getting 100K. This here is the way, if you look on any of your insurance policies, this is the way they're lined up. These two numbers here go together. So this doesn't equal 100K. This actually equals 75. This first number, when you see insurance policy, this is 25, which means 25,000. That is per injury or per person in injury per accident, or pays out per death per accident. This is the number this is the maximum that it will pay out per accident for injuries and death. It means pretty much it'll pay for two people. This right here is what it pays for property, 25,000. So this is 25,000, 50,000, 25,000. These numbers here, like I said, go together. So it'll pretty much pay for injury for two people, which is up to 50,000. Then you got the $25,000 property, which equals your 25K. But so this is the state minimum required for liability insurance. But I'm going to show you why that's a bad idea. I know we're probably going to get off topic. Then I'll answer your question about doing a bond or anything of that matter, showing that you have proof of insurance, and I'll show you why that's a bad idea. Be able to have money for 75K. But then you go to your self-insurance, 63-15-53, which is your self-insurance law. It states you have to have 25 cars in your name to be able to do self-insurance, and you have to go meet with the state. It doesn't list what you got to have, but you got to go meet with the state. I'm sure they're going to know names of drivers that are going to be driving it, driving history, how many accidents you've had, how many tickets you've had. Then they will give you the price you have to have for self-insurance. That's all done by the state. 63-15-49. This is going to be your law, which I shortened it right here, which is bond as proof of financial responsibility. This is here is what you was asking for about as far as having a money bond. This right here is another bad idea. And when I get done going over all these, I'll explain to you why I think they're done this way. Your bond is proof of financial responsibility. It states that you have to go through a security company that is allowed to do business in Mississippi. It doesn't specify what makes them capable or allowed or required. But if you wanted to bond yourself as proof of financial responsibility, it gets tricky. To do your bond, you got to have two separate people owning separate real estate property. It says owning, not leased, anything that matter, and you cannot have any type of tax lien or anything else. You have to sign these two properties over to the state as a lien holder. Well, like I said, that's another bad idea. The two people, two separate properties, you have to sign that property over to the state of Mississippi as a lien holder. Then, in very small print inside this law, you cannot just go and cancel it like you can if you was going through a separate company. It literally states that you cannot just cancel the next day if you want to. It's a whole nother process. And it doesn't give you all the guidelines. It just says you have to have two different properties. You have to own the two properties, sign them over to the state as lien holders. So pretty much they take possession of your property. If you cannot pay, then they sell these two properties to pay whatever this is, or whatever your outcome of wreck is. And on top of you signing your property over, they also add a fee. They don't tell you how much that fee is either. It just says it goes to the transfer clerk, which I had to assume that it's going to be the fee to sign everything over to them as a lien holder. As far as the self-insurance and bonding your property over, this is putting yourself at risk for a lawsuit. So if you have a wreck, somebody else isn't happy with the money or whatever they received, they're going to sue you. They can sue you anyway, but when you go through an outside company, chances are they're going to get sued first because they have way more money than you do. They have lawyers to fight this. You probably don't, but I'm assuming if you can come up with $100K just to throw away to the state, or 2 pieces of property from 2 different people, you probably have the money to pay for a lawyer. I don't. I'm going to go through this in just a moment to show you why I believe this is a bad idea, even if you had the 75 or the 100K to put aside, which is going to be a lot off topic. Pretty much this part is done. I'm going to show you financially why putting 75, 100K or your property down to the state is a bad idea, money-wise. All right, this right here is probably the most important thing, is to like and subscribe to the channel. We'll get back on that at the end of this. All right, this is why I say it's probably a dumb idea to go ahead and put money down and trust money to the government or other places. If you did have 100K to put down, you could put that into ETF, which has on average an 8% return annually. So that's 100K at 8%, which will bring you home $8,000 a year. Your insurance should not cost you that much, so that leaves you money in the pocket or to reinvest back into your ETF. Same thing with 75K. At 8% return, that's $6,000 a year. Your insurance should not cost you nowhere near that a year. 50K at 8% is $4,000. 25K at 8% is $2,000 a year. This right here is more than what I pay for 2 vehicles. I pay right around $1,100 a year for 2 vehicles, 1 full coverage, 1 almost full coverage. All right, as far as your real estate goes, this is another thing. If you're into real estate, I wouldn't be giving the state property. That's just me. Because if you have a 20% down payment, if you have $100,000, $500,000 property with 20% down. Same way. If you have 25K down, you get $375,000. With 50K down, you get $250,000 property. With 25,000, you get $125,000 property. The returns on this annually is endless because it depends on the property you get, what type. Do you get it at a good deal? Are you renting it, selling it? I think giving anything away to cover your insurance is not right, because you're going to end up getting sued. All right, I want to go back to this number right here. I don't know when the last time y'all went to an ER or anything with trauma. $25,000 is going to be a low bill. Same way with property. Normally wrecks will have 2 vehicles involved. If not, still 1 vehicle. $25,000. That's not a whole lot of money. It's not going to get you very far. More than likely, it won't replace any of the new vehicles that are coming out. Very few of them are under $25,000. A lot of used vehicles are over $25,000 now, especially with all this chip shortage and everything else going on in the world. So I will say, at some point or another, these are going to have to go up. When these go up, your price of insurance is going to go up. That's my theory on that. I believe that soon these numbers are going to have to change. They're going to have to go up, because this now is not going to pay for all medical bills, and this right here is not going to pay for a new vehicle, which, like I said, this right here is the bare minimum. So you need to check your insurance company and see, because this may not even cover your vehicle if you hit something else, but that will be the most your insurance pays. Earlier in the video, I told you I would tell you my thought on why it's so hard to get self-insured, and it's the money. Your insurance company, if you trace their money, you're going to see it going for campaign funds and everything else for your politicians. I don't care which side you vote. They're getting money from insurance companies somewhere, somehow. A lot of your insurance companies make their money not so much off of you yourself, but they make it off of the good drivers. Good drivers never have claims. They also take that money and invest it on themselves. Most of your insurance companies are not just insurance companies. Like, you take Geico, they're owned by Warren Buffett. If you don't know who Warren Buffett is, take some time to look at him. Very smart, rich man. I really don't have a whole lot more to add to that, but I just want to say thank you, Joe Average, for always being on the videos, commenting. For everybody else, please like and subscribe to the channel. Depending on your settings, I can't see when you subscribe, so if you don't mind, comment below that if you subscribe. Let me know that you're here, because I don't know. I've seen probably 5 out of the 50-something people that subscribe to the channel now. I've seen maybe 5 of y'all's emails where YouTube let me know that you're subscribed to the channel. And also, disclaimer, I am not an insurance guy. I'm not an insurance agent. I work in law enforcement in Mississippi. So if you have any more questions on insurance, comment them below. If you have a question on anything else, random question, it doesn't matter, comment below. We'll try to answer it. Thank you for watching. Have a great day.